Retirement used to feel simple, right? Save, invest, aim for 4% returns, and live off the dividends. But what if I told you there's an ETF out there claiming a yield so high, it sounds like financial fiction? We're talking about numbers north of 120% annually. Yes, you heard that right. Over 120%. Sounds insane, doesn't it? But this fund exists, and it's called MSTY. On paper, it looks like a monthly income powerhouse. But here's the truth. When yields sound this good, there's always a catch. And in this case, it's hidden deep in the fund's design. So today we're breaking it all down. What MSTY really is, how it can pay such huge yields, the risks no one talks about, and what a $10,000 investment could realistically turn into over time. Stick with me until the end because we'll also reveal the most realistic projections, what MSTY can actually deliver if you reinvest every month. Before we dive in, make sure to hit that subscribe button for MoneyQuest Broker, where we turn complex financial topics into clear, actionable insights. Alright, so what exactly is MSTY? First things first, MSTY is not your traditional dividend ETF. It's actually part of the YieldMax family, and, well, MSTY stands for YieldMax MSTR Option Income Strategy ETF. Instead of owning stocks that pay dividends, MSTY uses an entirely different approach. It targets MicroStrategy, or MSTR, a stock that's really famous for its massive Bitcoin exposure. But here's the twist. MSTY doesn't actually own MicroStrategy shares. Instead, it creates what's called a synthetic position. In plain English, it uses options to mimic the price movements of MSTR without holding the stock directly. Then, it adds a second layer to generate income-selling covered calls. Here's how it works. MSTY builds that synthetic exposure using a combination of long call options and short put options. This creates a position that behaves like owning the stock. On top of that, it sells call options to other traders, usually right at or slightly above the stock price. The premiums from those call options? Well, that's the income source. Because MicroStrategy is volatile, thanks to its deep ties to Bitcoin, option premiums are massive. That's why MSTY can flash jaw-dropping yields like 120% per year. When something sounds too good to be true in finance, it usually is, and MSTY is no exception. Those payouts look incredible on the surface, but here's the kicker. Most of that distribution is classified as return of capital. What does that mean? It's not pure income, it's your own money being handed back to you in chunks. It feels great to see $4.40 per share hit your account every month, but behind the scenes, your principal is shrinking. In fact, since its launch in early 2024, MSTY's net asset value has dropped nearly 27% in just 6 months. That's a huge red flag. The fund isn't generating growth, it's slowly liquidating itself to keep paying those big checks. This is what's known as yield erosion. It's why MSTY and other funds like it often show a pattern. 120% upfront yields, steady NAV decline over time. The risks you need to know, MSTY isn't for the one faint of heart, and here's why. First, volatility dependence. MSTY lives and dies by MSTR's price swings. And since MSTR is basically a leveraged Bitcoin play, this ETF is indirectly tied to the crypto roller coaster. Second, capped upside, full downside. If MicroStrategy stock skyrockets, MSTY misses out because of those sold calls. But if MSTR tanks, MSTY takes the hit. Okay, so remember, much of that payout isn't actually new income, it's really your own capital being returned to you. Over time, this can actually erode your investment, which is something a lot of folks overlook. And then, there's the liquidity concern. It's a niche ETF, so if demand is low or there are sharp moves in the market, you might see wider spreads and more slippage when you try to buy or sell. Another thing to consider is the premium dry-up. If volatility cools off, so does your income. Covered call ETFs really thrive on turbulence, and when markets calm down, those big payouts can shrink pretty fast. So yes, MSTY can deliver some eye-popping numbers in the short term, but honestly, it's not a wealth-building tool. It's more of an income extraction strategy. Now, what about performance so far? Since launching, MSTY has delivered some massive monthly payouts, but always at a cost. NAV decline is real, and if you look at the fund's price chart, you'll see a steady downtrend. And, similar ETFs in this family like YBTC and PIPI show the same pattern. You get yield now but pain later. Even so, MSTY is still grabbing a lot of attention because, let's face it, that 100% plus headline yield looks pretty irresistible. But once you peel back the layers, you realize this is definitely not free money. It's structured volatility harvesting, and it relies heavily on option premiums. So what happens if you invest $10,000? Well, here's where reality really checks in. Those 120% yields? You can forget about them lasting. Based on historical patterns and similar strategies, a more realistic long-term annualized return might hover around 15%, assuming you're reinvesting every month. So, why 15%? Well, it's because as volatility drops and option premiums decline, those insane payouts start to normalize. That's exactly what happens to most funds in this category over time. So, with 15% reinvested monthly, here's the projection. After 1 year, you'd have about $11,500. And after 10 years, that grows to around $40,456. So after 20 years, your investment could grow to roughly $163,665. And if you stick with it for 30 years, you might see about $662,118. At that point, you'd be collecting around $7,200 per month in dividends. But remember, these projections assume you're reinvesting everything and there's no major collapse in the share price. Would I put MSTY at the core of my portfolio? Absolutely not. This isn't a long-term compounding machine like SCHD or VOO. There's no dividend growth, no underlying business expansion, just a strategy to squeeze income from volatility. But as a tactical play for short-term income? Maybe. If you know the risks, stay active, and understand your trading stability for yield, MSTY can serve a purpose. Used wisely, it's a powerful income generator. Used blindly, it's a ticking time bomb. Don't forget, subscribe to MoneyQuest Broker for more insights into strategies that build wealth the smart way.